Hello, ladies and gentlemen, welcome to the Coin Lady channel. Today, we'll be discussing Ripple and its token, XRP. And I do want to begin with this news, which dates back to last year. 5 years have passed since this happened. An intriguing aspect of this article is that its central premise remains unchanged. This is a description of liquidity. And this is the only section I'd like to talk about the subject matter of. Having clean oil in the form of cheap and readily available liquidity means less risk and a faster, smoother transaction if you imagine a financial transaction to be an engine with moving parts and multiple factors that affect its performance. Now, I want you all to realize that lots of cash could be unlocked by making use of on-demand liquidity. Natural foster accounts are something you've probably heard of. The last time we checked, there was around $27 trillion in those accounts. That would result in a huge sum of money becoming available instantly, and it would also inject a huge sum of liquidity into the system, both of which would help alleviate many of the problems we see today. It has the potential to alleviate a liquidity problem. But I also think Ripple is way ahead of the curve here. They seem to have been working on this problem for a very long time. I believe that Ripple sees the enormous potential and power behind crypto and digital assets, and I think their product suite, especially with features like XRP-powered on-demand liquidity, presents a significant opportunity. Because of this, the gap between the old world of fiat currency and the new world of cryptocurrency has been closed, and digital assets have become the connecting link. With the help of the Liquidity Hub and the Ripple suite of products, businesses have access to optimized crypto liquidity and an extensive payout rail network, allowing them to power crypto payments, crypto treasury operations, and other solutions as the number of businesses using cryptocurrency grows. Also, I totally agree that this is a fantastic chance. Even though it lies outside of the XRP ecosystem, I find this to be a very exciting prospect. Don't even bother associating XRP with it. I believe that Ripple is playing a pivotal role in pushing forward the development of cryptocurrency and its widespread adoption. We agree that an optimized central location for crypto liquidity would be beneficial. On the other hand, a global system of last-mile payout rails enables widespread global payouts. Then, down here, we have centralized digital asset management, widened access to capital, and done away with the need to hold pre-funded capital positions across a number of different liquidity venues. That has massive implications. Again, not many people give a hoot about this because, as XRP holders, we're not particularly interested in the other services Ripple provides beyond, say, international money transfers. But I also believe this to be a tremendously promising field of study. In my opinion, there is a major opportunity to solve a looming liquidity crisis. I believe Ripple is working on a solution to this problem. And we can see how this will function below ground. All of the major cryptocurrencies are accessible through the Ripple Liquidity Hub, which acts as a central point for market makers, exchanges, and OTC desks. And I have no doubt that XRP will be included. But at present, we don't observe much attention being paid to it within the Liquidity Hub. This is a huge untapped market. Our primary area of interest is liquidity, including both liquidity and opportunities to increase liquidity. This is the moment when everything starts to go to hell. The summary of the Fed decision can be found in the Kobashi letter, which we now present to you. This occurred on the 22 ND, then? Yes. I haven't given you guys an update in quite some time. I'm sorry. It's just that I have so many things I need to organize. And I wanted to elaborate before giving a complete rundown of events. First of all, we can see that the Fed increased interest rates by 25 basis points. The same could be said for this. We discussed it in the chat room. 25 with a pause afterward was what I figured. We finally had a 20-year horizon. That leaves this one and another, followed by a pause. However, this year I think the Fed should pause. The banking system will collapse again if they don't. And we hear you, growth-stifling events, and we see that the banks we trust are safe bets. Some further price increases may be warranted. Extremely serious. Aware of the possibility of inflation. The Federal Reserve is determined to keep fighting inflation. Do you think the Fed is making it clear that preventing inflation remains a top priority despite the failure of many smaller financial institutions? The Federal Reserve thinks the problem is under control. In 25 minutes, Powell will make a statement on the matter. And while we have seen a few updates on this, we have also seen a lot of people questioning his decisions because, for example, him raising the rates by 25 will significantly restrict the markets and lead to a liquidity crisis. Here at home, we're also witnessing the Fed's checkmated decision, either raise rates to halt inflation, as is happening, or increase the yield premium of money market funds over bank deposits. Additional carry trades fail. The financial system in the United States relies on carry trades. Most significant. By design, all banks engage in duration mismatch, where they borrow short and lend long. By forcing the bank to lower rates and reflate its balance sheet, an inverted curve punishes carry trades boys. However, inflation has continued to be stubbornly high. The general public is gradually moving their savings from low-yield banks to the high-yield SIP. The incentive to relocate is generated by the rise in insured brokerage fees. The news of late raises both awareness and a sense of urgency. Do you know of a dashboard I can use to monitor these processes? He was referring to the Fed website. However, in all honesty, I believe that the Fed is currently in a checkmate position at this time. Earlier, on the 22 ND, before we saw the Fed decision, I had already predicted this. When I said that the public is being told falsehoods about the safety of their bank accounts and the protection of their deposits, I was referring to the fact that the Federal Reserve is currently at a terrifying juncture in which its choice to either pause or raise interest rates will inevitably lead to systemic chaos. But as I predicted, we are now forced to deal with the fallout of the Fed's 25 basis point increase in interest rates, which has significantly reduced banking liquidity. A much more severe storm is on the horizon, and the crisis is far from over. And yes, I think a much bigger storm is on the horizon. I believe that, with all the recent happenings in the banking industry, there were many warning signs pointing us in the direction that, hey, guess what? If we make it over here, this is just the beginning. To begin then, the Bank of England has warned that disruptions in the international banking system could have widespread effects on the British economy. An open letter to the Treasury Committee. The UK Central Bank. The risk of crystallization of identified vulnerabilities in market-based finance could be exacerbated by continued volatility and sharp moves in asset prices. And they announced it to the world. To me, this is insanity because we are witnessing what appears to be a worldwide banking sector meltdown. As of now, it's just a modest beginning. True, but then what? When the pressure valve is released, all hell will break loose. It's like we're back in 2008 or something. My prediction is that this will occur on a much grander scale. We wonder what will happen next, because otherwise it seems like the same story will keep being told. For the simple reason that I believe this time something actually will change. And I think we can get the new system working properly. It is likely that the new system will be launched at that time. Yes, I believe everything is leading up to the Big Bang. Although I could be wrong, even if I'm totally off base here, I still think we should do something about the situation right this second. Yet the issues from 2008 persist. So, we obviously haven't matured since 2008. This is crucial, after all. The situation is very serious. Even over here, we're all for you. Capital One, credit default swaps are increasing at a rate that exceeds that of early 2020, when the world was in crisis. The banking crisis has only just begun. And again, as credit defaults are a major factor, we do consider them. In my opinion, the economy is currently experiencing a serious crisis. First of all, we are all aware of this. If you go to the shop or receive your utility bill, you'll notice that prices have skyrocketed, as I'm sure everyone watching this video can attest. Most people really do have to budget every dollar. Despite the Treasury's best efforts, the economy is not doing well. The Fed hopes to give the impression that the economy is thriving. We are all aware that this is not true, but people continue to believe it anyway. All of this is an elaborate fabrication. People in their 20s and 30s, if you will, continue to make large purchases despite the fact that they often go without necessities. I noticed a few people buying brand new cars just the other day. A lot of people appear to be purchasing homes. Still, people today are living way beyond their means, thanks to excessive leverage. And the biggest issue is that this will lead to credit defaults. There will be a massive uptick in credit defaults. Again, just getting by is extremely expensive right now, so I imagine most people are turning to credit to make ends meet. This is something I witness on a daily basis. Just so you know, I'm going to be totally honest here. Only recently have I. My girlfriend's job required me to relocate, so I did just that. The work she does. We had to uproot and go somewhere else. We were uprooted from our homes and had to find new ones. We rented a 2-bedroom, 2-bathroom apartment that was probably around 1,300 square feet in size. Rent was around $1940 a month in the year 1940. When they request that I renegotiate my lease, even though I had already informed them of my intention to move, they had me renew my lease in order to receive a concession. The monthly rate for that flat was $2,480 at the time of the discount. Now, I have a question for you. Would you rather pay $2,480 in rent each month or make a down payment on a mortgage with an interest rate of 7%? To put it bluntly, your financial well-being is going to hell either way. That's why so many people struggle to make ends meet. The Treasury and the Federal Reserve continue to insist that everything is peaky, but it isn't. You can also see over here. That's a massive bank run if it's 20%. Shocking. They haven't left yet. After a 20% drop in deposits, PacWest has secured $1.4 billion in cash from Atlas. The failure of Silicon Valley Bank has put pressure on the few remaining West Coast lenders. I hope you all understand what's going on now. The scope of this is enormous. All of these banks are massively overleveraged with your money, so what we're about to see will make 2008 look like a blip. The credit market is also extremely overleveraged. People continue to overspend and live well beyond their means, despite the fact that everyone is still struggling to make ends meet. And there will be a total and complete destruction. Over here, we can see just fine, too. Keep in mind that our $31.40 trillion debt limit has been reached. Most people don't realize this, but they can also protect your bank deposits without a law from Congress. The Treasury is looking into short-term measures to ensure all bank deposits are accounted for. This is completely out of control. Over here, too, we were able to observe. Federal Reserve Chair Jerome Powell and Yellen have both stated that U.S. banks, capital, and liquidity are all in good shape. The other day, I reported on this as though it were impossible. No way. Technically, you can argue that everything is fine because you're going to print so many copies, and that's probably going to be the main thing they consider. Increase the debt ceiling so we can print an infinite supply of fiat currency. Because of this, current holders of fiat currency are being brutally punished. Right now, I'm telling you all to back off. Consider the harm the Fed has wrought over the past few years. Visit the supermarket. It's always $100 whenever I go to the supermarket. Power and petrol prices have risen dramatically in recent years. In other words, the prices of all of the things you use regularly are going through the roof. What though? If you really wanted to, you could still shop. It is still possible to go out and purchase a television. Also, the cost of televisions has dropped significantly because, hey, they need to keep you occupied. Let's assume you're still watching TV. Take in what the powers that be would have you hear via the corporate media. It's impossible to afford everything else right now. Eventually, something will malfunction. Here's where you can hear that Janet Yellen predicts the frequency with which events like the recent run on Silicon Valley Bank will increase. It's possible that rules need to be revised. The situation is chaotic. Keep Yellen's 2017 prediction that we won't see another financial crisis in mind. And they'll keep trying to place the blame on others. I also believe that crypto will be the scapegoat. They will likely keep saying that cryptocurrency was to blame, that exposure to cryptocurrencies was the root of all evil. Nonsense. Factors at play are well known. It's the endless printing of fiat currency that's destroying the economy, flooding the market with dollars that no one wants to spend. This is completely absurd. Finally, I wish you all a good time watching this video. Please show your appreciation by leaving a like, subscribing, and turning on notifications if you enjoyed my free content. See you in the next video. Bye.